Assalamu alaikum, everyone. We just want to give everyone a few minutes to log in, and inshallah, we'll be starting our webinar on Zakah shortly. All right, well, thank you for joining us, and assalamu alaikum. Welcome to this webinar today on calculating Zakah on modern financial assets. Now, again, there's a lot to learn about Zakah, the obligatory charity owed by Muslims. And this presentation today will provide a brief overview of who should pay Zakah, what types of property it's owed on, and how to calculate it on certain assets. I'll take a moment to introduce your presenters for today. My name is Fatima Iqbal. I'm a financial advisor at Azzad Asset Management. And joining me today is Bashar Qasim, our founder and CEO, who will be here to take your questions. Before we begin, we want to let you know a little bit about Azzad Asset Management so that you know where we're coming from when we talk about Zakah. At the bottom of your screen, you'll see 7 of the services Azzad provides for our clients, and these include calculating purification and Zakah amounts, which is the topic of today's webinar. Azzad follows halal investing guidelines from AAOIFI, which is the Accounting and Auditing Organization for Islamic Financial Institutions. And the Zakah calculation guidelines in this presentation follow those AAOIFI rules. AAOIFI's comprehensive standards are based on a consensus by internationally renowned Islamic finance scholars from 8 schools of Islamic thought. But please be aware that this presentation is not intended to be comprehensive in all schools of thought. Now, we at Azzad take Sharia governance and compliance very seriously. And in keeping with the guidelines from AAOIFI, we have an active Sharia advisory board and in-house Sharia auditor. Additionally, our Zakah and purification calculations that we do for our clients are audited for accuracy by a third-party verification firm, the Islamic Finance Advisory and Assurance Services. Again, this webinar is intended to provide a brief overview explaining the general principles of Zakah calculation. And of course, you can always learn more by visiting our website, azzadasset.com, or calling us at 888-86-AZZAD. So now let's turn to today's topic, which is Zakah. So first, let's understand the basics of Zakah. Zakah is a financial obligation on every Muslim who owns certain kinds of assets worth more than a set amount, which is known as the NISAB, if they had owned those assets for at least 12 lunar months, known as the HAWL. Now, Zakah is mentioned in the Quran 81 times, and it's often mentioned along with Salah, or prayer. And of course, while giving to charity is a financial transaction, it's also an integral part of a Muslim's spiritual health. And we know that specific care should be given in making sure it's handled correctly. Zakah, again, is an opportunity to bless your wealth by giving it to help those in need. Zakah is obligatory on every living Muslim, regardless of gender, age, or mental status, who owns assets that meet the other conditions of Zakah. However, if certain conditions are not met, then it means that it's not compulsory. Let's take a look at the conditions that must be met before Zakah does become obligatory. I'll just list them now and then explain them in the next few slides. The conditions are owning at least the minimum amount of wealth, known as the NISAB, the lapse of 1 lunar year, complete ownership of the assets by a particular person. There should be no other reason an asset is not zakatable, such as insolvency, and the assets must have some real or assumed growth. Now let's talk about the first condition. The total amount of wealth owned by an individual must meet a minimum threshold, and this is called the NISAB. So while prophetic hadith described the threshold or NISAB for different assets, such as gold, silver, and livestock, the question is, what NISAB should we use for our modern financial assets? The NISAB can be determined based on the NISAB of silver or gold, and this is equivalent to the current market value of 85 grams of gold or 595 grams of silver. Now, the value of 85 grams of gold in early April this year was around $5,400. So, any Muslim who owns zakatable assets worth $5,400 or more and who has held these assets for 12 lunar months should pay zakah on these assets. According to the Hanafi and Maliki juristic schools, the NISAB is calculated at the beginning and end of the year, and changes in between are overlooked. Any increase of property after reaching the NISAB during the year is to be included in the total sum counted for zakah. And this is just considered the easiest and most applicable among the other juristic views, which has made it the majority of what scholars adopt. So we'll go over which assets are zakatable in a moment. So what happens when wealth reaches the minimum amount, or the NISAB? The next condition is that these assets should be held for a full lunar year, starting from the day it reaches the NISAB. The Arabic word HAWL refers to this holding period of 1 lunar year after which zakat becomes due. Now, zakat al-mal is not due on a particular day for everyone, but it should be paid once per lunar year. Many Muslims choose to pay their zakat during Ramadan, both for the additional benefits of giving during this month, and of course, because it's easy to remember from year to year. Each individual can set their own HAWL date based on when they have held zakatable assets for a minimum of 1 lunar year. For people who choose to set a HAWL date based on the solar calendar, the percentage for zakah is raised up to 2.577% instead of 2.5% because the solar calendar is a little bit longer than the lunar calendar. Now, the third condition for zakah is complete ownership, and there are 5 factors that define complete ownership. Those are settling, ownership vesting, accessibility by owner, disposable by owner, and no interference by others. Now, before we go on, let's briefly discuss the ownership criteria for different kinds of accounts to determine whether they are zakatable. We should refer to the conditions of zakat to see whether the owner has complete ownership of a particular account. Owners may have full ownership in accounts like IRAs and education savings accounts, but may have to pay taxes or penalties when withdrawing. The fact that taxes or penalties would apply does not prevent the IRA from being zakatable, but zakat would only be calculated on the amount that would be left after applicable taxes and penalties. So for example, an individual who has an IRA can access the money in the account even though they would have to pay a penalty and taxes if they withdrew it before retirement age. For accounts with full ownership, again, zakat is owed on the amount owned after taxes and penalties. However, for accounts that do not have full ownership, there is no zakat due. So for example, an employee typically cannot withdraw from a 401k or 403b account at their current job if they are below the distribution age. In this case, the 401k or 403b is not zakatable until the employee either leaves that job or reaches the age when they're allowed to withdraw from the account. These provisions are plan specific, so you should read your 401k summary plan description from your employer to find out whether you're able to withdraw money from your 401k account or not. Now, the third condition for zakat that must be met is that the assets must be completely owned by a particular person or family. Assets owned by an organization or government are not zakatable. And zakat is liable on the assets that are completely owned and vested for the owners. Complete ownership requires that the assets be accessible and disposable by the owners without the interference of others. A person must also be solvent in order for zakat to be due from them. If a person has debt that is immediately due that is greater than what they own, then they're not liable for zakat. Assets that are zakatable include gold and silver, cash, cash equivalents, assets intended for trade or sale, good current debt, livestock, crops, and minerals. Now, all cash, gold, and silver are liable for zakah at 2.5% based on their values on the day of the HAWL. Again, if the HAWL is linked to the solar year, remember that zakah is 2.577% instead of 2.5% to make up for the difference in the two calendars. There are also certain assets on which zakat is not owed. Assets that are considered to be capital goods, such as tools or factories, are not zakatable themselves, but the income that is derived from them is zakatable upon meeting the conditions we talked about earlier. Furthermore, personal use property is not zakatable, and this includes one's personal residence, vehicles, and other personal belongings. Only halal and lawful assets are liable for zakah. So no zakah is required on haram or unlawful assets, such as money from interest, gambling, alcohol, pork, stolen money, bribe money, or any other impure money. And such assets or money must be returned to their lawful owners or donated to charity as purification. Now, purification is not a form of zakah or sadaqah, and it's only intended to rid oneself from impure money that one never intended to benefit from. So in modern financial times, this includes securities or stocks that are deemed not to be halal according to Sharia investment guidelines, including financial options and derivatives. And again, we at Azzad Asset Management use halal investment guidelines established by AAOIFI and adopted by the Azzad Sharia Advisory Board. Finally, assets intended for retained ownership and for the purpose of deriving income are also not zakatable. So this means that zakah is not owed on the current market value of investment property and income-oriented stocks. Instead, again, the income derived from them is zakatable, as is in the case with capital goods. Again, zakah is not paid on the market value of rental property, but again, with the income that is derived and is held for the full HAWL period would then be zakatable. In calculating zakah, we start with the zakah base, which equals all zakatable assets minus liabilities or debts that are payable by the HAWL date. Zakah, again, is not obligatory on wages, salaries, and income at the time of receiving such income. And then zakah is assessed based on conditions we discussed earlier, like the ownership and HAWL period requirements. Now let's look at how debt relates to zakah. We can look at zakah on debt, whether it's due to oneself or owed to others. If you make a loan, you owe zakah on any amount that is repaid as of the HAWL date if it's in good standing. But if the loan is past due and it's in bad standing, then no zakah is owed until the owner recovers the debt and the zakah is paid all at once for past years it was in bad standing. Now let's talk about debt owed to others. If you have taken a loan and owe debt, the amount due before the HAWL date is deductible from one's zakah base. However, debt payments that are due after the HAWL date are not deductible from the zakah base. So one common question we get is whether a person may deduct their current home mortgage payment from their zakah base. In this case, they can only deduct the current home mortgage payment from their zakah base, but not the entire loan amount. But if you have debt from buying commercial assets, that debt can be deducted from one's zakah base. Any interest portion of any debt acquired in a non-halal way should not be deducted from the zakah base. This relates to modern financial assets since bonds are also a form of debt. And interest-based debt securities, including bonds, banking notes, CDs, commercial paper, money markets, and others that are liquid, are liable for zakah only on the principal amount or market value, whichever is going to be lower. And any gain that is due to the interest accrued or market appreciation is again not recognized as being lawful and is therefore not eligible for zakah. And again, such gain should be considered unlawful and purified by donating to charity. Zakah is obligatory on assets that have been held and saved for one full lunar year after reaching the NISAB. And again, the minimum amount of wealth after which zakah is due. Most of us acquire money at different times throughout the year, such as from salary, inheritance, gifts, rental income, etc. And if you choose to be very specific and only pay zakah at the time it becomes obligatory, then you can track the earnings and pay zakah for each amount separately when 1 year has passed from the date on which you took possession of it. But an easier method is to pay zakah on all the cash you've held for 1 year since reaching the NISAB. And this will bring a greater reward and raise you in higher status. It's also easier and more generous towards the poor and needy and others who are entitled to zakah. So in this case, if 1 year ago you had $10,000 in your account and the value dipped mid-year to $5,000, and now you have $15,000 in your account, with this method, you would pay zakah on the $15,000. So we've gone through who is liable for zakah and what assets and account types are zakatable. So now let's talk about the calculation of zakah on stocks. We'll use common stocks as an example since we get a lot of questions about them. And of course, our clients at Azzad know that we calculate Zakah for them on an annual basis and send a statement showing the total amount to be purified and paid from their portfolios. This calculation can be used for shares of publicly traded companies that you can acquire. And for the purpose of this explanation, we'll assume that the stocks held follow halal Islamic guidelines, since again, Zakah is not owed on shares of stocks that are not halal. There are two basic intentions for purchasing a stock, either for the growth and appreciation of the stock or for the income or dividends it can provide. And with this distinction, let's take a look at how we can calculate Zakah on a portfolio of stocks. While a shareholder may reap the benefit of both growth and income from a particular holding, the original intention of why it was purchased is the key. And of course, unlike taxes, we don't have the IRS looking over our shoulder. And Zakah is, of course, a matter between yourself and God. So your intention regarding your investment determines which calculation you should use. The Zakah of a portfolio of stocks will be calculated by adding the Zakah owed on income stocks and the Zakah owed on growth stock. So you may be wondering, why differentiate between growth and income stocks? Stocks held for the purpose of growth and appreciation are like assets that are held for the purpose of trading and are considered commercial goods, or in Arabic, arud tijara, where arud means non-cash and tijara means items intended for profitable trading. For these shares, their Zakah base will be based on the total closing market value of shares owned, or net asset value on the HAWL day. The net asset value is then multiplied by 2.5%. To give you an idea of how a Zakah calculation on growth stocks is done, let's take an example of an IRA account investing in a growth stock that has a market value of $50,000 on the HAWL date. To calculate the Zakah, we must account for 10% penalties if the person is under age 59.5, and also the tax bracket. So assuming this person is under age 59.5 and in a 15% tax bracket, we calculate Zakah by multiplying $50,000 times 1 minus the penalty rate times 1 minus the tax rate by 2.5%. This gives us the Zakah due on the amount they would have in hand if they were to withdraw from their IRA account. Stocks held for the purpose of deriving an income, such as dividends, are different from arud tijara, since the primary intention of purchasing these shares is not for trade and appreciation. The Zakah is not paid on the market value of the shares owned, but on the zakatable assets in the balance sheet allocated to the shares owned. So in this case, we actually must look through to the underlying company's balance sheet. And the portion of company assets which are used for income generation, such as capital goods, properties, or equipment, are not going to be zakatable. However, assets such as cash or inventory that the company may have on their balance sheet are zakatable. So for example, a company may have 80% in assets that are not zakatable and 20% that are zakatable. Any current debt and long-term financing of zakatable assets is also subtracted from the zakatable assets. And this is then divided by the number of outstanding shares. We're then left with the Zakah base, or zakatable assets per share. Of course, we understand this calculation on income stocks is not as simple as growth stocks, and is one of the reasons why we calculate this for our clients at Azzad. As a reminder for all of us, these are the categories of people or the causes that are eligible to receive Zakah. Now, sometimes people wonder, what is the difference between the masakin and the fuqara? And here, the masakin are the needy and the fuqara or the poor. And the poor have nothing, but the needy are those who have something, but is not enough to live decently. So in this case, the masakin or the needy have more than the poor, but they still lack adequacy. And Allah subhanahu wa ta'ala referred to the masakin in the Quran in Surah Kahf, chapter 18, verse 79, in the story of Khidr and Prophet Musa alayhi salam. And here the masakin were the poor people who owned a ship and actually worked in the sea. Let's talk briefly about purification, which we want to clarify is different from Zakah when we're talking about investing. Part of the process of making stock investing halal is screening companies' lines of business as well as their financial ratios. These are some of the screens and ratios according to AAOIFI. Sometimes it's not possible to know exactly where all of a company's revenue comes from, or the revenue is a trivial amount. And because of this, Muslim investors should purify their investments by donating to charity even the small amount that may have come from impermissible sources. Purification is different from zakah, and it should be calculated and deducted before calculating zakah. Abdullah bin Umar was a companion of the Prophet Muhammad ﷺ and the son of Umar bin al-Khattab. In reference to purification, Abdullah bin Umar said, "To return 1 dirham haram is more beloved to me than paying sadaqah of 100,000 dirhams." And he continued by adding another 100,000 dirhams and another 100,000 dirhams until he reached 600,000 dirhams. Before giving money to charity, you also want to make sure the organization is legitimate and your donation will actually reach those in need. So here are some tools that you can consider. First is the IRS Nonprofit Charities Database, which has a tool called the Exempt Organizations Select Checks tool. This tool allows you to enter the name of an organization and see if the organization is exempt or not. And it's important to verify that an organization that claims to have 501c3 tax exemption status is actually exempt. Otherwise, if the organization is not exempt, your donation won't be tax deductible. There's also Charity Navigator, which rates charities based on their financial health, accountability, and transparency to help donors make informed decisions about their contributions. And Charity Navigator has evaluated over 8,000 tax-exempt charities. So if your chosen organization is not included, you should be sure to find out why. And finally, GuideStar maintains information also on 501c3 nonprofits. They have financial documents such as the 990, which can help you evaluate the legitimacy of an organization. And the 990 discloses where and how an organization's donations are spent, including the earnings of top officers. Now, all nonprofits are required to have up-to-date 990s available to the public. So again, if you can't find this information about an organization you're donating to, then it's important that you take a further look. Azzad is pleased to help our clients with tax-efficient ways to donate to charity as well. So please talk with your Azzad advisor to learn more about your options. Now we'd like to go to our section on our pop quiz. The first question: Zaki is a 45-year-old engineer who has a 401k plan with his employer. The market value of the plan on his Zakah HAWL date is $100,000, and his 401k contains stocks for capital appreciation only. Zaki's tax rate is 30%. He is not in debt, and he is fully invested in the 401k plan. How much does Abdullah owe for Zakah on his 401k? Now, before you start pulling out your calculators, take special note to see whether in this case Zaki has complete ownership over his account. Here, this mentions that Zaki has a 401k plan account. And in this case, the answer would be D. The 401k would not be zakatable because he cannot withdraw the assets. Question 2. Khadija is a real estate flipper who buys and sells houses. She bought a house in Miami for $450,000. While she's seeking a good sale price for the house, she received a year's rent on the house totaling $30,000. The market price for the house is $500,000. Khadija is not in debt, and she kept all the rent money for a year. So how much zakah is she liable for after 1 year? Now, in this, recall that we talked about the intent being important in terms of how zakah is calculated. And in this case, the answer is actually A, 2.5% of $530,000. Question number 3. Ahmed was given a car as a bonus from his employer. Ahmed decided to sell the car when he received it. It took him 14 months to sell the car. How much zakah does Ahmed owe on the car? Well, the question, does Ahmed actually owe zakah on the car? And the answer is in fact C. No zakah is owed because it is not a commercial asset acquired with the intention to trade. Question 4. Yusuf was given options to buy 10,000 shares of Cisco at $10 per share. A month before the HAWL, the price of Cisco reached $30. Yusuf then exercised his options and purchased 10,000 shares of Cisco. Again, how much zakah does he owe on these shares? Now remember, we're looking for the various different criteria for zakah, one of them being the HAWL period. The question notes that it was a month before the HAWL period when Yusuf exercises options. So the answer here is in fact D, $0, because he did not own the shares more than 1 year. Question 5, Hassan just found out that his financial advisor had invested his account in bonds, which earn money only from interest. He bought the bonds for $10,000. They are now worth $11,000. The bonds have coupon payments of 5% per year and mature after 10 years. The total amount he has earned so far is $2,000. How much zakah does he owe on them? Now recall that we talked about zakah on bonds, and in this case, zakah is only due on the principal, since the interest gain is not halal. So in this case, the answer would be A, 2.5% of $10,000. At this point, we'd like to open the floor to any questions that you might have, and I'd like to invite Bashar Qasim, our founder and CEO, to join us for answering these. Bashar, we have several questions from the audience. One of them is about IRAs. So in terms of IRAs and also employer-sponsored IRAs like SEP IRAs, would these need incomplete or complete ownership?
Assalamu alaikum, everyone. Thank you, Fatima, for the nice presentation. The question, again, we look at the ownership criteria, the completeness of the ownership, whether the ownership is complete. And in this case, the sub-IRA, you will be able as a owner to access this fund, although you would be liable for taxes and penalty. So the zakatable amount would be the amount reduced by any taxes or penalty. So yes, that would be zakatable assets in the IRA reduced by any taxes or penalty from the zakah. Now, also within the IRA, we need also to examine how the account is invested, as you mentioned, whether invested in securities that intended to derive an income, and they're not treated as urud tijara, but as urud mustaghallat, or securities intended to benefit from the price movement and treated like urud tijara. So that's the answer for this question.
And we also had a follow-up question regarding 401ks. Again, as we discussed in the presentation, it's important to look at your summary plan description from your employer to see whether you're able to take withdrawals from your 401k. The question looks to be asking if the 401k is not intended for future income. If the 401k, I believe, is intended for future income when retired, do you have to pay zakat now, even if you are below age 59 and a half?
Yeah. So again, we look at the 401k documents. I think most 401k documents usually will not allow you to take money before reaching age 60 or resigning from your work. So in this case, it will not be zakatable because ownership is not complete. You don't have access to this money before age 60 or before your retirement. So we don't have to look further. So that's the criteria. If you're just enabled, then that becomes zakatable. Or let's say you resign, they enable you. So the enabling itself, that would be the criteria to judge whether this would be as the account would be zakatable or not. Yeah.
Okay. Thank you, Bashar. And actually in the presentation, we also talked about how oftentimes people will choose a date in Ramadan to keep as their HAWL date because it's easy to remember, whether it's the 1st of Ramadan or 15th of Ramadan, they know every year that's the day on the lunar calendar they need to pay their zakah. We have an interesting question. Is it okay to set the annual zakat calculation date to be right after filing my tax return
Yes.
and know how much I owe?
Well, what I advise like clients, in this case, that they like to kind of like simplify their zakah, is to set their HAWL to be at specific date, for example, after the end of the year or at the end of the year. Yeah, they can do it, but if they do it on a solar basis, then they have to increase, I think, the zakah amount by 7%. So it's 2.57 rather than 2.5%. So it needs kind of like to be adjusted in this case. But that's okay. Yeah, you can set the HAWL to be based on a like solar year for to simplify your calculations. Yeah.
Okay. And again, I think in terms of, relating zakah with tax filing dates, let's say you set your HAWL date to April 15th, use the solar calendar. And then you would have a tax liability due. Would you be able to subtract your tax liability due from your zakah base?
Yes, of course. Like now, because taxes is due right away, correct? So if there is any taxes, pay the taxes, whatever left, that would be your zakatable base after tax, because the tax it's considered to be a current debt. It's due right away. Yeah.
We mentioned in the presentation that we calculate zakah for our clients. That is available to our clients through your Azzad client portal. That is posted there. We do that. We actually do the calculation on the 23rd of Shaban every year. That's the HAWL date we've selected, so that we can post those reports to your client portal within the first few weeks of Ramadan. So that report has been posted. If you have any questions on how to access it, feel free to reach out to your advisor who can help you get logged in. Another question, according to Sharia, do we have to declare the giving as zakah to be accepted as such, or can we keep this information to ourselves? So I assume this question may be asking, sometimes whenever you're writing a check, they ask you to select, is this going to be for zakah? Do we need to make an intention that this is particularly for zakah, or declare it in any way? If you can shed any light on that, sure.
Yeah, of course. إنما الأعمال بالنيات, the deeds are considered by intention. So you have to make clear intention that this money you're giving for zakah, you can make it to yourself. You don't have to share it with others, no. But you need to intend this to be you intend this to be a zakah, not voluntarily sadaqah, for example. Yeah.
And I would just add, sometimes organizations, they ask you to select whether this is a donation. Again, some of these organizations might be doing work for many different purposes. Not all of it is.
That's a good point. Yeah. Yeah.
So in that case, you may want to clarify that, yes, this is zakah, so that the organization can make sure your donation goes for zakah eligible causes.
You're right. You're right. Yeah. When, these times, we have many organizations with many charitable activities. You want to make sure that the charitable activity is eligible for zakah. And if the organization does a lot of activities, then you have to tell them, so they won't distribute that money for a charitable activities that not eligible for zakah.
Yeah. Now, there's a question also about in those that are investing directly through the Azzad funds, not through our RAP program. Is there a template for zakah available for the fund? Now, in this case, we don't have a template for zakah. We do have a purification calculator available on our website. So if you are investing in the Azzad funds through any broker on your own, like TD Ameritrade, as this person is asking, you can access our purification calculator. But the rules for zakah in terms of calculating zakah, follow this. And Bashar, maybe you can also talk a little bit about the difference in zakah calculation between, or the zakah base, maybe between the Azzad Ethical Fund and the Azzad Wise Capital Fund.
Yeah, it's really difficult to have a template, because when we do the zakah, we take into consideration many factors. Like we look at the client, whether they're above 59 and a half or less, whether there is a penalty. We look also their tax bracket, how much taxes to be due. As you know, the tax code system is a progressive. So as you make more income, your tax bracket will change. And also we need to look into your securities. We need to see like how much unrealized capital gain, whether this unrealized capital gain short or long. Also, we need to look at the portfolio itself, whether this portfolio treated as urud tijara or as urud mustaghallat, as there is a different formula for each one. So it's really, there is very difficult to create a template because, it will be missing a lot of needed information to calculate this accurately. Also, like for the, sometimes we have, after introducing the Sukuk fund, the Wise Capital Fund, that's kind of a new assets because we're investing in Sukuk, Islamic bank deposits, that's in the Wise Capital Fund. So there is what we call the zakah base, not necessarily to be equivalent to the market value of the fund, because sometimes some of these assets not considered as a cash or cash equivalent or as a urud tijara commercial assets. So, like for example, the Wise Capital Fund, I think this year, if I'm not wrong, the zakatable base is about 68% of the market value. For the Azzad Ethical Fund, which is a fund that is managed by an institutional manager that intend to achieve capital appreciation, where there is an element of a trading, we treat this as urud tijara. So the zakah will be as 2.5% of the market value. Yeah, so that's like, for the zakah formula that we are using to calculate for our client assets. And also the nature of the account, whether this is a Roth IRA, a traditional IRA, a custodial account, a covered deal account, all these accounts, how they are structured dictate how you also calculate the zakah. So it's not just based on the fund itself or in a portfolio or a security itself.
We had just a follow-up question also about the difference between a Roth IRA and a traditional IRA in regard to the zakah calculation. So with this, keep in mind that we're talking about zakah being owed on the amount that is available to somebody or that they can withdraw after taxes and penalties. Correct. So if you have a Roth IRA, of course, if you're past the 5-year requirement, if you're over the age of 59 and a half, then you would not be subtracting any taxes or penalties. But Roth IRA rules are complicated. So you would want to see whether, again, you would be paying any taxes or penalties, even in a Roth IRA. Again, if you're not meeting the 5-year requirement or under the age of 59 and a half, to see whether you would subtract that from the net asset value before your zakah calculation. So I hope that was clear and answered that question. We have a question, Bashar, about zakah due on illiquid investments, such as venture capital and private equity investments.
That's an excellent question. If you have no access, if they won't allow you to access this fund, then this is not really zakatable until you gain access to the assets and you'll be able to distribute or spend these assets. But if they enable you to access it, let's say they enable you to access it and you are really, let's say, again, if you are intending this investment to derive an income or just to own it, then the zakah will be based on the balance sheet, whatever zakatable items or zakatable assets in the balance sheet, like inventory for sales, cash and cash equivalent, or they have any zakatable assets like gold, silver, minerals, whatever the line of business itself. But if they don't, again, or sometimes, because these are closely held companies, so the management itself, if they are really, the owners are Muslims and they are liable for zakah, then the zakah should be actually done on the business itself, on the business level. But again, that may not be available. So it depends on the situation. Like if we're talking about like, you're investing with XYZ company in Silicon Valley, like there are many venture capital there. And these companies, usually they are locked in the investment for many, many years. And then you have no access to this. You're right, that would not, the ownership would not be deemed to be complete, and that money will not be zakatable. But once they enable you to access that money, then you start the zakah from the time you're enabled to distribute or disperse that money within the business.
A follow-up question: what if you are, let's say, you are investing in a private business, so maybe a partnership, and you don't have information rights into the balance sheet of the business? We had talked about, calculating zakah, for example, on income stocks, where you have to look to the underlying balance sheet to understand how the compatibility. Yeah. What would you do in this case?
AAOIFI, they suggest an alternative method for calculating zakah in case that's not available. The information is not available about the balance sheet. Then they say, oh, you pay the zakah on dividends only. And again, that's really as a last resort. I think, most of these businesses, they have the zakah, they have the balance sheet available. But in case you get a situation, for some reason, balance sheet is not available, then you can maybe follow AAOIFI standard number 35 that deem a portion of the 2.5% of the dividends or to be the zakah in this case.
We have a question about purification. Can the purification amount be given to the IRS as part of any taxes due?
No, there should not be any direct or indirect benefit from the purification. You cannot use it to settle your obligation. This should be money washed out. Never intend to really earn, but you earned it, never intended. So you just cleanse it out. You can give it to any charity. Just make sure you don't give it to build a masjid or to print the Quran, because that should be from the pure of your money. I think there is the evidence for this from the incident during the time, the early time of Islam, that when they used to build a masjid, they used to look for the best of their money, the best of the charity. They have the cleanest, purest money, not this purification money. That money is kind of like, even some scholars would not even count this to be a sadaqah, to be honest with you. That should be completely cleansed, never intended to own, and should be kind of revert back as a form of a cleansing to where it came from. So that's the cleansing. Like even as a charity itself, maybe some charity, sometimes they invest, we still report to them the purification figure, and we encourage them even to give it to another charity, not for their charity as it probably go for like paying some of the salaries of the people working there, but just even to give it out as if they have no benefit whatsoever, directly or indirectly, from that type of money.
Related also to purification, going back to bonds and CDs, what about paying zakah and purification on CDs from employee-owned credit unions? Does that make any difference if it's from an employee-owned credit union versus a conventional bank?
I mean, the principal is recognized, so you pay whatever the principal or the market value, whichever is less. So in the CDs, of course, I think there is no market value. So whatever the principal is there, still like even with the credit union, as you know, the credit union, they lend money to each others, so it's still lending to some owners of or shareholders or members of the bank. When somebody borrow, it's really borrow from the rest. So yeah, that would be considered as an interest. So that should be actually excluded from the any interest you earn on these CDs should not be included in your zakah base. And that money, this interest should be actually cleansed and given to charity.
Another question we have about looks like paying zakah on stocks. Now, we talked about the HAWL period and you have, reaching the HAWL. Now, if you buy and sell during the year, does this reset your zakah clock?
I'm sorry, Fatima, the question again.
The question was, if you buy and sell stocks throughout the year, does it reset your zakah clock? Does each transaction have a HAWL, or do you pay on the current market value?
Yeah, like, for urud tijara, the same. Like, let's say in case these type of stocks intended to trade, to buy, I mean, let's take each category. For the ones that intended to buy, correct? Trade, for example, and we traded like urud tijara. So in this case, as you buy and sell, we don't look at the date of buying and selling. We look at the date of the HAWL, and then you combine everything together, securities and cash in this case, and you pay the zakah on the market value total. Now, if this is something that you owned a stock with the intention to derive an income, again, we look at the balance sheet, and then we go, in this case, for the HAWL from the time you owned or you purchased that security. Like, again, there's a difference between urud tijara and non-urud tijara, or like what they call urud mustaghallat, in this case. So we look from the moment that you owned, and then you look at the HAWL, 354 days owning those. Let's say you never intend to trade the urud al-mustaghallat. So you're right, you go by the HAWL start from the moment you owned these shares.
Okay, so again, going back to urud tijara and urud mustaghallat, urud tijara, we're looking at just the value on the HAWL date, not necessarily when we bought the shares, when we sold the shares.
Yeah, they refer to this like they refer to this gain, like even when the price goes up or down, let's say, or you're making a profit. So that profit that you made from the tijara, from trading those shares, they refer to it as zakat al-mal al-mustafad. This is the money, the gain came from the existing money, from the same one. So it will follow the principle in HAWL and NISAB in this case. So yeah, we disregard. Let's say, for example, you bought a company for, let's say, $1,000, and you have 100 shares, so you have $100,000. And just the 3 days, the price jumped to maybe $120. So now you have 120,000. You will pay zakah on the 120,000, even the price moved 20% in the last 2 days before the HAWL. So that would be the zakah base. So you'll be 2.5% of the 120,000, not the 100,000. Or if the price dropped to 80,000, then you pay the zakah on the 80,000, not on the 100,000.
All right, thank you, Bashar. Another question, again, going back to the HAWL, what about inheritance? If you receive inheritance, when would zakah be payable on it?
So from the time you inherited that money, again, knowing that this money are zakatable, So that from the moment you inherited, you count 1 lunar year. And that would be the amount of zakah assessed on that money. So the start of the hawl becomes from the moment you inherited that money. Okay. Yeah. Now, let's say, and again, depends on what you inherited also. Like if you inherited, for example, non-zakatable assets, this will not be zakatable. But let's say you inherited like money, cash, or gold, or silver, things of that sort. Yeah, those would be zakatable in this case after they stay with you full lunar year.
Okay. There's a question again about 401k accounts. And if I have a 401k with a large amount and I calculate the zakah on it, let's say $25,000, and I don't have $25,000 cash to pay the zakah, should I withdraw the $25,000 from the 401k? Again, just I want to clarify, a 401k may or may not be zakatable depending on the provisions of your particular plan. If your plan does not allow distributions before retirement or termination of employment, then it would not be zakatable because you would not meet the conditions of complete ownership. But let's assume that you have an asset and you do have complete ownership. And let's say the zakah is an amount where you don't have cash from outside the account. What do you need to do?
Yeah, first of all, you can pay the money not necessarily from that from the money in the 401k. You will be able to pay it from other money. But if you don't have the other money and the zakah is due, you should really liquidate money from that plan and pay the zakah from it, from the assets in the 401k. In this case, if you are enabled to withdraw that money, you see what I'm saying? If you're not enabled to withdraw that money and you have no access, that money, that plan would not be even zakatable.
Right. Another question we have, which goes back to the question we had of illiquid assets and zakat on illiquid assets. What if you have a loan where you finance the purchase of an illiquid asset now? Again, would this not be zakatable? And would you deduct the debt, on your zakat base?
If these assets are zakatable, like based on the market value, and you use the loan to finance it, and that would be deemed to be urud tijara, then yeah, that would be zakat, would be deductible. But if that loan is not has not been used, or the zakah has not been considered based on the market value, so that loan, we look at that loan. If this is really a current debt that is due before the hawl, yeah, you can deduct it. But if it's not, like the mortgage, then you will not be able to deduct that from the zakah base of other assets.
So in this case, if the asset is not, we cannot pay zakah because it's illiquid. Let's say there's not.
You're right. And then you use debt to finance it.
Mm-hmm.
So that would, and that debt is not current. It's really deferred. Like, you pay it after maybe 10 years or it's financed. Yeah, if it's not current, then you cannot deduct it from the zakah base of other assets that has not been used to finance with.
Okay, so only current debt can be deducted.
Current debt, exactly. But for example, mortgage and the house, correct? Your house is not zakatable. Your mortgage is really deferred. It's not really current. So you can only deduct the due amount, the amount due before the hawl. Those are deductible. But the full mortgage, no, it's not deductible.
All right, thank you, Bashar. We just have a few questions again on zakat eligible entities, asking whether Islamic schools and construction for mosques, can these be counted towards zakah?
Like, for example, masjids, the scholars, they mentioned masjids in non-Muslim countries. They consider that to be eligible for zakat distribution, but not the masjid in general is not. But masjid in non-Muslim countries, they consider that this is in a broader sense of fi sabilillah, in a broader sense of fi sabilillah. But the masjid by itself, like if it's in a Muslim country, that would not be eligible for zakat. So here in the non-Muslim countries is exception for that, because they do a lot of functions that meet the broader sense of fi sabilillah. Now, Islamic schools, again, the same thing. Like if they do some of these, if they fall within the fi sabilillah to support the faith and do, for example, defend the Muslims and their identity and the faith itself and spread, yeah, so that would be in this case. So every school, again, is different in this case, like depends on the type of a school and the Islamic school. I think Islamic school, for example, the same outside of the Muslim countries, they may fit that the broader sense of fi sabilillah. So then that would be eligible for zakah.
Well, with that, we would like to thank you all for joining us for this zakah presentation. We hope that it was valuable for you. We pray that you all enjoy this blessed month of Ramadan with your families and that we can all benefit from its blessings. Thank you again, Bashar, for joining us. Please have a good day.
You're welcome. Thank you. Thank you, everyone.